session. So, Anthony, the floor is yours. You will update us on the road to net zero, tools and analytics to help the investment community. So enjoy the presentation. It will be recorded and also in the live stream. So not sure if the
I don't know if
connected. So maybe as a last point, after this session, we will take a bit longer than we have scheduled. There's the lunch, so you can enjoy the lunch. And then at 2 o'clock, we start again with the streams. So, but okay, I think everything's
great.
Up and running.
All right.
So Anthony,
thank you, Ron.
Yours.
Appreciate it. Thank you. Well, thank you for coming to listen about the path to net zero and how the investment community can use tools and analytics to reach that goal. So ICE has been on a sustainable finance and journey for almost its entire life. We started off with our investment in the carbon markets. ICE is the home of carbon trading. Over 95% of all carbon allowances that trade globally trade on our markets. So we've been developing our paths along that piece, and takes us to today, where our business covers not just the carbon markets, but also ESG data for companies, for sovereigns, for US municipals, climate risk information, indices, impact bond information, and regulatory information, so things like SFDR. So, we've come a long way in terms of the journey. Today, I wanted to focus on the net zero journey and the actions that you might be taking as an organisation, and how you use data and analytics to take that journey. Maybe before I start, just kind of they always say know your audience. So just to kind of understand the audience here today, how many here kind of know and understand net zero and what its goals are and the definitions and where we are on that? Kind of understand that really well. Raise your hands. So we got two. Okay, all right. So it's okay. So I'll work from that perspective. And apologies to the two people who know it really well. There may be some stuff that you can come up and help me present. Maybe I don't know. But, so maybe just to help illustrate kind of net zero, kind of help the audience. Maybe if everyone can just put their hand up for a second. So if everyone puts their hand up, and then for those people who've travelled here by an aeroplane or a car, and you haven't offset your emissions, you can put your hands back down again. Okay, so the only people left coming up. So okay, so those people who've got their hands up still are carbon neutral, right? So that's what carbon neutral is. You haven't emitted on a net basis, perhaps what you've been doing, but you might have used offset to offset some of your allowances. So put your hands down for those people who've flown here. So we should have just those people left who've kind of walked or come by bike. So great. So we've got some people there. So that's net zero, right? You've no emissions into the atmosphere from your piece. The train doesn't count because the electricity will have been generated using a mixture of not 100% renewable, I'm afraid. So that wouldn't have been net zero. That would have been lower emissions, but. Okay. So that's carbon neutral. So it's carbon neutral. So that's carbon neutral, not net zero. So I'll come on to talk a bit. So maybe just a quick reminder of kind of what net zero is all about and why it's important. Okay. So I'm not going to spend too long on this. Many of you probably know this already. Obviously, you can see here some of the different pathways that the IPCC has been focusing on and looking at the impact that some of those pathways are going to have on the world around us. And obviously, from a human perspective, those are pretty terrible impacts that we're going to be facing over the next century. And obviously, from a financial institutional perspective, kind of beyond that side of things, obviously, the investments are important things that you need to be caring about. And obviously, we're aiming to try and get to that pathway. Unfortunately, at the moment, we're still very much on the higher trajectories. And the question is kind of how do we as a finance community kind of help and try and address that? In terms of, so this is to some degree what I was trying to describe with the of what we're looking at in terms of transport pieces. Clearly, we're trying to get to a point where we have either kind of net CO2 emissions or net GHG emissions. And again, slight technical difference there. CO2 is just one gas that creates greenhouse gas effects. Total greenhouse gas effects come other gases like methane and nitrogen-based emissions as well. So from a net zero, though, net zero is the point at which here, for the green bar, or here for both bars, that the net in terms of any kind of offsets that are created here is balanced with the emissions that take place. And the important thing around the net zero versus carbon neutral is that any offsets have to be what we call sequestration of the carbon. So it's actually things like planting new forests that take carbon out of the air, or mechanical carbon removal. And those are things which I'll come on to talk a little bit about in terms of our exchange and what we're looking at from that perspective. I find this quite useful in terms of kind of how we get there as well. So kind of looking at the global energy use and what we use the energy for, and how we get to a point where kind of the energy, where we think we're going to need energy by 2050. So you can kind of see here the kind of the rise and increase from kind of energy requiring kind of 50 gigatons of carbon dioxide equivalents up to 80 gigatons by 2050. So we're seeing a big increase of energy use over that period as different parts of the world grow and expand. In terms of being able to get to net zero, many different activities that you can undertake there, and many of the things that I think are the headlines around things like planting forests, putting renewables in. But I think it's important as well to look at some of the big impacts, and some of this plays back to kind of some of the debate and discussion that's going on in the EU at the moment around things like the use of natural gas within this pathway. For example, the removal of switching coal to gas has a very significant impact on that pathway to net zero. So whilst it's in of itself is not necessarily carbon neutral, it has a big impact on that pathway. So in terms of the levers that the world is facing on this from a net zero perspective, clearly the kind of different institutions have different areas of focus on this. Many of you, if you're within the kind of the asset management or the asset owner side of things, your companies might be part of the kind of GFANZ umbrella, the Glasgow Financial Action for Net Zero, in terms of the Net Zero Asset Owners Alliance, or the Net Zero Asset Managers Alliance, and banking and insurance, etc. So many parts of the industry are working together to try and achieve that. Clearly, kind of government is focusing on that as well from a governmental perspective to try and develop policies and goals. Again, we're seeing that in the EU from things like the EU green taxonomy, the green bond standard, etc., and policies to try and drive that, as well as things, as I mentioned earlier, like the emissions trading scheme and what and how that's being used and has been very successful over the last 20, 30 years to really drive down emissions and change the merit order of energy usage. And then clearly kind of companies themselves are directed in terms of the activities they're taking, the changes in their pathways and what they're looking at from that perspective. I think kind of just looking at the levers kind of available from an asset management perspective, because I guess that's kind of what we're here primarily to talk about. There's really a broad web of interactions that take place within the industry, and what and how kind of asset owners to asset managers to banks and corporates think about from that angle. And I'll talk a little bit about kind of some of the details behind this, but clearly things like stewardship becomes very important from an asset management perspective, talking to the companies that you're investing, understanding their goals and their activities and what they're looking at. Clearly talking to your asset owners and your investors, what their goals are, what they're trying to achieve, how you communicate that to them becomes equally important. And then in terms of capital raising, what and how do you get involved in capital raising around things like green finance and the like. So talking about green finance, I kind of wanted to be able to show kind of some of the pathway for example, here looking at green bond investing. So just a chart here looking at kind of using some of our data on green bonds in terms of the amount of issuance that's changed over the last few years. And you can see significant increase in investment from that perspective. But from an asset management perspective, clearly kind of there are different aspects of that selection criteria that becomes important around kind of impact, understanding return, which becomes important, and in terms of transparency and validation. What you can see there in terms of the kind of black bits on top of those charts, that's showing the split between bonds that have been verified by a third party, the blue part, and the black ones where the green bond has been self-verified. So the issuer has said, hey, I've got a green bond. I haven't got a third party that's come in that's told me it's green or verified it, but I'm going to say it's a green bond. So what I think has been good over the last kind of year or so has been that proportion has been decreasing. We are seeing an increase in third-party validation, and our data kind of helps investors around that to kind of look and understand kind of what that validation is and who does that validation, to give you some confidence of what you're investing in. What that's also masking to some degree is different regions and different markets. So in Europe, for example, the amount of bonds that are verified by third parties is well into the high 90s. Virtually all bonds are verified by third parties. You look at China and the US, the proportions are much higher that are self-verified, but decreasingly quite fast. So again, that's why you're seeing those drops downs in that proportion over time. Just as an aside, the drop in Q1 is primarily driven by the drop in green bond issuance in Europe in March, which was primarily driven by the kind of geopolitical issues in terms of the invasion in Ukraine that's driven the reduction in issuance in that. But other regions continue to see an increase on that. So kind of data sets that ICE has that helps investors on green bonds. One of the things, I guess, and I think that the previous presentation looked at this as well, that there is a premium or a greenium as it's known. You can see here, for example, a chart showing the yields and the difference in those yields, or the green spread, if you like, between a kind of a normal bond, a kind of German 10-year in this case, versus its green equivalent. And you can see the kind of the grey piece there, kind of showing how that kind of between 4 and 6 basis points of premium that is needed to be paid. And that's primarily driven by supply and demand. There's more demand for green bonds in the marketplace than there is supply, and so that creates some degree of premium that you as investors will need to manage into your returns and how you look at it. So when you look at your portfolio selection as an asset manager, you think about what and how from a net zero perspective, how you're going to achieve that and how you're going to take those goals and that pathway. Clearly, in terms of what you're looking at and how you're trying to reflect that back from your investors, there's different ways you can think about this. So some investors will be looking for, and a lot of funds that are out there at the moment will be focusing very much on that low carbon area. They want to invest in low carbon, in low carbon technologies, low carbon companies, such that their investments are not focused on creating kind of carbon dioxide emissions now. And that's important, and you need to understand, therefore, what the emissions are of companies right now. However, the general view, and I share this view, is that actually to make an impact on the pathway to net zero, it's more important to engage and invest and conduct with companies that might have higher carbon dioxide now, and work with them on the transition to a lower carbon dioxide piece in terms of how you help and push them down that route, the previous charts of that path down to net zero. And to do that, you really need to understand, therefore, what are their goals, what are their pathways that they've put out there in terms of emission reductions, and how they're achieving those emission reductions to be able to look at that. So that's really the kind of the middle piece, and I'll come on to talk a little bit about that. And then finally, I guess you've got your high carbon emitters that perhaps haven't got goals there. And again, as asset managers and owners, you've got a great opportunity to be able to influence and push those companies in terms of changing their policies. And I think we've seen that already in terms of some of the recent kind of shareholder votes and the like that have taken place to allow us that. Clearly, as an asset manager, you need to thinking about your risk assessment as well. So thinking about your physical risk and your transition risk, and also your controversy risk around this pathway to net zero. And part of that is about understanding how realistic are their goals, how likely are their goals, and how much engagement you had. So again, information around risk and controversy becomes important as well. And that's kind of a core part of what and how we think about it. And then finally, that communication back to the asset owner, as I said, becomes really important, that you're understanding what their goals, what their objectives are, and you're able to communicate back to them how you're achieving those goals in a clear way. Clearly, that becomes kind of harder as you perhaps go down from a more institutional investor down to less sophisticated investors, and how you look at that. And clearly that's where some of the recent regulations around things like SFDR have come in about standardizing some of those reports and some of those pieces, and the data sets that we have help clients kind of create and communicate those pieces back to investors as part of the requirements under SFDR. So I just wanted to just talk about kind of what we're seeing at the moment around emissions and the like. And as I say, coming back to that first piece of if you're trying to identify companies that have got a kind of low emissions to be able to put in your portfolio, or companies that have got high emissions and understand kind of their pathway around that, kind of the first step really is disclosure. So what you can see here is some, across some of the main global indices, kind of what and where the disclosures are right now for scope 1, 2, 3 emissions. And as you can see, from a European perspective, it's pretty good. Most companies are disclosing their emissions from this perspective, allows you to have that information and engage with them. Unfortunately, from a US perspective, we've still got a reasonably long way to go on that, especially around scope 3. And the previous presenter has kind of talked a bit about kind of some of the regulation that's coming in that's going to help hopefully drive some of that disclosure to allow you as investors to have a better engagement on that pathway. And even more so on targets and achievement. So from targets and achievement, and again, I try to kind of put in to try and help kind of the huge variety of information and targets and wording and language that companies use around their targets and goals that they're setting around emissions. And so just kind of a bit of a word cloud here to try and add something a little bit more fun about how you look at that. But you can see all the different ways that companies talk about their emission reduction targets. The biggest one obviously is just carbon emissions. Well, what does that mean? How do you understand that? Not hugely helpful down to things like scope 1 and 2 or scope 1 and 2 intensity or absolute emissions, et cetera, et cetera. So again, I think there's a little way to go in terms of standardization of target announcements, and again, some of the regulations should help with some of that standardization around disclosure, because that really is going to help you as asset managers to be able to understand what goals they're setting and whether those goals fit with your objectives that you're setting as an organization. Sorry, I should have said it right at the start. If you have any questions, please shout out as we go through. Clearly, engagement and stewardship. I'm not going to spend too much on this. I think you're kind of, again, from an asset management perspective, you've got a good understanding of what and where you engage with the companies and how you make those assessments and how you talk to them. But that becomes an important part of that net zero journey about understanding what the companies are what you are doing and how you engage with those companies and how you make sure that they understand where you are and your objectives are. And to do that, you need to, again, have that information to be able to set those baselines, set those metrics about where you're wanting to go. And we can help you with much of that. Carbon neutrality now. So clearly, I said at the start, in terms of we discussed the offsetting of emissions and train travel, for example, and how that's done. Clearly, from a science-based targets perspective, which is an organisation that looks and tries and helps companies set their targets on the emission side. Kind of offsetting to say that you're net zero now is not something that should be kind of used in the near term. The reduction in emissions themselves is what's important. But that doesn't mean that you can't do both at the same time. And so the ability to be able to use kind of carbon credits and offsets in the near term, kind of helping you to balance your carbon liabilities and assets to be able to create that neutrality and benefit to the environment in the short term, whilst you're working to reduce the emissions. So there's no reason you can't do an and rather than an or from that perspective. And from an asset management perspective, we're increasingly finding and talking to asset managers who are trying to do this themselves, as well as the companies themselves. So about understanding the emissions of their portfolio, of their fund, and investing and buying credits to offset the emissions of their fund across their specific holdings. And that's kind of engagements we're having on the market side of things with our carbon credit futures, for example, that we have on the ICE side of things. I'm just going to hopefully we'll see if this works. Yeah, there we go. Excellent, good. So what I just quickly wanted to be able to do was just kind of show you some of the data sets that we have and how people kind of use our information to be able to undertake some of those portfolio selections or investments and look-throughs into companies. So generally the easiest way to do is let's kind of take an example portfolio here, for example. Oh, that's not good. Apologize for this. And then just kind of drop in your identifiers here. And again, one of the great things that from an ICE perspective is that we've got really strong entity to instrument hierarchies. So from that perspective, we're able to link directly from entities to securities, which means that you don't have to have securities tied to the parent instrument, if you like. And we can map to the entities that issue the securities. So these will be the issuers that actually list those securities that we looked at in terms of that example. And when we start looking at and understanding the ESG side of things, just quickly on that entity hierarchy, I think it's an important point to mention is that if we just look at the ones here, for example, and you've got an example. You've got an issuer here, Kaufman and Broad SA, which has issued one of the securities that you're interested in, but it's not actually an entity that has its own ESG information. It's a subsidiary within a company. What you can do within our platform is you can replace that. So in this instance, you're viewing the details, and I'd already pulled that up, so you can see the kind of the overall parent of that entity. And if you want to, you can then kind of replace that row, which you'll now kind of see right down the bottom with KB itself, wherever it went, rather than the subsidiary that didn't have the ESG information. So you can think about and look at up and down that hierarchy tree, which again, from a fixed income perspective, becomes especially important because the bonds are often not issued by the parent entity. Slightly different from equities, but from a fixed income perspective, that becomes important. Clearly, we're talking about net zero and the like, so let's have a think about looking at entities here. So we looked at Total as an example. It's a big oil and gas generator of emissions, but that doesn't mean that you wouldn't necessarily think about it as part of that investment and engagement kind of things that we were talking about, and how you could look through and understand, from a data perspective, some of the carbon reduction pieces that they're looking at. They've got a shadow carbon pricing, so they're clearly engaged on what and how they think about carbon pricing as a company. You've got the emissions information here as well, and then they've also got kind of what are their targets, kind of what are their baselines, what are those targets based upon, and how are they achieving that. One of the things that our platform provides you as well is the ability to be able to kind of get it to right click. You can look through. So for example here, you can look through and see that the source of that information was in their annual report, where it was on the annual report. So when you engage with those companies and think about it, you can be able to talk to the documents that they've produced and have a better engaged conversation around that. So that's just kind of a quick canter through kind of our platform and how you might use that in terms of how you're thinking about engaging on net zero.
Last question.
Yes.
You actually had 2022 data for Scope 1 and Scope 2.
Yes.
In the initial company. Is it right, 2022?
So the dates in our platform report pertain to the date that the report was issued, not the date to which the emissions pertain to. So 2022 means that's the report that came out in 2022. Yeah, versus now we're going for fiscal year 2021. Yeah, exactly. And so hence, as we go through 2022, that will expand out. But we can go back in history and look at what reported in 2021, for example, from a back place. I did just want to talk about some Paris-aligned benchmarks and climate transition benchmarks. Clearly, from an index perspective, as you're thinking about and benchmarking some of your portfolios and thinking about that, the EU is focused about how they bring in tracking ability back to those goals and targets. These are benchmarks that we're developing to allow clients to be able to select and identify bonds that will match benchmarks that we will create around this. clearly the definitions of Paris-aligned and climate transition benchmarks are fairly well set within the kind of EU regulation. Again, this is us focusing on fixed income, so fixed income indices using our kind of standard bond indices and then applying overlays on top of that meet those criteria, either starting with a 30 or a 50% reduction, depending on whether it's a climate transition or a Paris-aligned benchmark. And then I'm not going to spend too much on that one. And then we'll basically use a methodology of tilting the parent benchmark based on the emissions of those, or the intensity of those emissions from those instruments across the different pieces to allow you to be able to meet the targets that are set between those benchmarks. And that's what, again, if firms are looking for that low carbon now or that transition piece, and that's what your investors are looking for, these kind of tools enable you to be able to think about that and look at it from that side of things. And then just finally, I just did want to briefly talk about, as I've been talking about, some of our carbon credit futures and auctions as well. So from an ICE perspective, we have a very broad and deep and liquid environmental markets complex, covering, again, things from an allowance perspective, which covers kind of your negative externalities, so your the allowances that you might get set from the EU or the UK or North America, as well as some positive externalities, which covers things like, I say, kind of carbon credits. We recently launched a series of futures, nature-based futures, to trade on ICE, to be able to invest and purchase those credits through a futures program, as well as the launch of auctions to allow you to engage with issuers of those carbon credits, so projects who maybe bring those to market, and you might want to engage with them again if you're looking to try and create a carbon neutral fund at a fund level from that perspective. I think that takes me to the end of the presentation. So there you go, a black screen. So hopefully that was helpful and gave you some indication of what and how we can help you with your net zero journey and why net zero is important and how you're getting there.
So first of all, Anthony, thanks for this very impressive presentation, and I really liked it. I really like that you started off with the awareness on net zero, so maybe I have a question on that later, but maybe first to the audience, do you have a question for Anthony? Don't be shy if you... But I have prepared some questions, okay. So it's not a long list, but so what would be the next stage in the road to net zero?
Yeah, so I mean, I think some of the tools and analytics that we can start thinking about developing, and we're already seeing this in some of the requirements that are coming out from some of the regulations, are things like temperature alignment, so kind of what and where are your investments, and does your fund fall along those pathways, and where that pathway is going to be heading. So it's fine to say that you're aligned with a certain temperature now, but where are those companies going to be in 10, 20 years' time, and therefore does your fund support and fit with those pathways? And I think that's going to be a key part of, again, if we spoke about how the financial industry is thinking about things, like kind of how the net zero asset management community will think about that and developing frameworks around those kind of things.
Okay, maybe then any other questions popping up from the audience? Okay, maybe then as a last question to you. So you made us aware of our net zero, let's say. So what is there any, like we have, for instance, on LinkedIn, you have your social selling index, or my son is using Snapchat, and there are some ratings there as well. Are there some ratings where we can check our net zero index ourselves, so that we have that on our watch or on our mobile phone, that we can see how net zero we are as individuals? Or is that...
I mean, there are a number of different, I guess, kind of websites out there that you can look at your carbon footprint and assess the size of your carbon footprint. I think the WWF one is perhaps one of the better ones that are out there that you can look at and do that. I think from a retail perspective, kind of what and how the asset management community kind of communicates with the retail market, things to be able to kind of simplify that, and to some degree net zero makes it easier, because it's if you think about ESG more broadly, you're trying to bring together, let's say, hundreds of different factors into one rating or one goal that an investor might care about. Net zero is a bit easier, frankly, because it's one goal, and so to be able to communicate that one goal makes it an easier communication with your investors.
Okay. So I will certainly have a look at that website. Yeah. So thanks again for your presentation. We have a small present here.
There we go.
So,
Great.
thanks.
Thank you very much. Appreciate it. Good. I hope that was helpful.
So maybe as a last point, I already mentioned that we will have, let's say, quite an extensive lunch downstairs in the conference room and on the first floor. So enjoy that lunch. We will be back at 2 o'clock. There will be a video, if I'm correct, from eMission. They will be, that's a company that will educate people with regards to ESG. So maybe next year we will also have an extra day where we have some more education on ESG. But I think all the presenters of this morning already gave us a lot of information. So thanks for those presenters and thanks for the audience joining this session. And see you later today.